we invest with the idea that like we will be in positions for at a minimum, like call it a year, right? So for years, right? And so we try to be opportunistic sometimes on like the entry point, but mostly it's around, okay, well, what do we think are the global backdrop, the macroeconomic backdrop over some long period of time? And I think there's two kind of answers to your question. I think the first is, well, I actually think it's quite positive that crypto and Bitcoin held up quite well over the weekend, right? Even at a time when you knew that equity futures were going to open down or trade down. And there's some conversation will say, okay, well, Bitcoin is a store of value. And so like, commodities are up, Bitcoin be up. But Bitcoin hasn't traded that way, obviously, for months right now. And so I think it's positive that maybe it did, have that correlation or traded that way. And I think it looks like, the type of trading you've seen, around these events recently and around the Citrini article when equity sold down, et cetera, implies to you that there aren't necessarily like a lot of sellers left, right? Most of the people are holding now have much more like long-term perspectives, right? And so I think that's a good setup for, being in crypto over some period of time. Now, that doesn't mean anything for like the long tail of alt tokens because there's other structural issues there around what happens with market structure and, whether or not these things should be worth what they're worth and, revenue and fundamental value and things like that. So I think there's that base. So that's really constructive. Now, I think in the short term though, to your point, right, there's so many things happening that are real risk, right? So like the equity market kind of rallied after NVIDIA really beat earnings and they gave, good guidance in the future. And then like it faded that rally super quickly, right? The equity market also, when the Citrini article came out, like a bunch of stuff traded down right away. And like, Citrini, I really like the rating that they do, but this isn't like a household name. This isn't somebody that everybody looks at and is like, okay, well, like I definitely should be trading off of, what they think. And there was a lot in that article that was like just science fiction, right? And I think
reminding me a lot of like George Orwell's 1984 type of panic.
Yeah, no, 100%, right? And so I think it's very obvious that there's a lot of fragility in the market too, right? And I do expect that kind of the long-term setup for crypto is still very good with potential for market structure with how many kind of institutions are adopting. But it's very hard, I think, to bet on crypto if you think that the equity market might take a kind of a real bath here. I think there was a couple articles out over the weekend or some sell side reports, which were trying to figure out, okay, well, if there's some fundamental value loss around, a increase in inflation and a slowdown in growth because of the rise in oil prices. And depending on how long this goes on, like, maybe we're looking at something like a 10 to 15% correction in the S&P. And if that happens, like it's hard to see Bitcoin holding up, right? Even, considering all the really good like fundamental value that or fundamental backdrop that we're talking about. At a time when there's just all of these other things that are unclear when it comes to tariffs and when it comes to anything to do with AI risk and et cetera.
Yeah, it's funny. I think I saw an article in the FT over the weekend that I think there was no better like representation of traders not knowing what to do than seeing the whole market trade down like 3% on a blog report or a blog that was published. So I think that kind of epitomizes things pretty well. So let's talk.
I think it's important to note, just to and because I want to really make this point, which is that the long-term outlook for the broader crypto ecosystem right now is probably as good as it's ever been, right? And we continue to have this like dislocation around, okay, well, what's happening in Wall Street in terms of adoption of tokenized assets? What's happening with stablecoin demand? What does that mean for, real economic activity on chain? Like, if we get a market structure bill passed, now we can talk a little bit about that, but I think that's a little bit up in the air. But like all of these things are really good over the long run if you have that type of time horizon.
Yeah. And we'll get to all that because those are all really kind of good points. And I know most of my listeners are not day traders. They're more long-term investors, much like you guys are. But I mean, I was actually looking around Deribit this morning at some of like the options positioning here. And I think it speaks to a lot of what you just discussed. I mean, by far the biggest open interest is, I think, a put at 60,000, especially like settling over the next couple of days. But then once we kind of like span out even to like the end of the month. I mean, then we're talking about calls at like 90, 100. I mean, it completely switches. Like there's very, very, very bearish sentiment, or at least people are trying to protect their downside over the next couple of days. But then things certainly are changing. I don't know if basically the data I laid out from Deribit, et cetera, suggests that we're mispricing the market. I mean, you also mentioned too how if the rest of the market tanks, even if Bitcoin is structurally better set up than other assets, it's still going to go down as well. But I mean, I guess maybe do you think that the market is mispricing some of the risk when it comes to Iran because of how messy it could become? And then again, in a very not financial advice way, traders, people listening here might wonder how they can better protect their downside. What do you think are like one or two ways that they could do it if they so chose?
Yeah, I think market's probably pretty correctly pricing in risk, to be honest. The equity market's only being down a little over a point. I think makes sense, right? Bitcoin is actually up 2% over the weekend, right? And so it's been kind of sideways. Obviously this, I'm not an expert and a lot of what's happening on the option side right now, but it seems very clear that people are trying to protect, like near-term downside or long-term structurally, bullish. That all makes sense to me, right? Because with this is happening in real time. I think when you put that in kind of context of everything else that is happening on the rate side, on the the AI concern side. I mean, obviously, we talked about the Citrini article, but one of the things that happened, maybe it was Friday, is that Block came out and said they were going to cut 40% of their workforce. Right, that is the largest correction or largest layoff, and I think S&P history. For a company of that size, of a public company, right? And like that, it's not clear for sure that will happen, across all of these other companies, but it is, sort of a canary in the coal mine of maybe there will be actually a lot of layoffs, right? And what does that mean for the economy and the market if it does, right? And that's a longer term risk, but it's, that sign, people are trying to now price that in, right? And so I think there's just so many things happening and so many variables that's impossible to, really isolate, Iran risk versus, risk of everything else. Right. And so it seems pretty correct to me at the moment. And I think like cautious with the right, in the near term with the right outlook over the long term makes sense. I think there's also, we've been on the crypto side, we've been trying to price in the likelihood of a market structure bill. And if you look at Polymarket today, I think it's 52% ish, right? The people I talk to on the Hill, if they're not in crypto, but they happen to be close to it, are more bearish than that. Call it like 35-40%. If you talk to a lot of the lobbyists in crypto, they're more bullish than that. But of course, that makes sense, right? And so there's just so many variables happening right now that I think it's really hard to make sense of the market, and it's moving so quickly, right?
Yeah, absolutely. Couple more market questions, and then we're going to get to clarity and a few other topics. For one, I feel like Bitcoin, for the most part, most of the time has been unfairly punished when bad things happen over the weekends because it's typically the only asset that is trading. But we are now moving into a world where there's tokenized stocks, other tokenized assets that do trade 24/7, gold, etc. I know, especially for stocks, it's very, very early days for them. But I'm curious if you saw anything interesting over the weekend with how any of those assets are traded, or if not, like maybe just prognosticate a little bit on how, like, once those markets become bigger and more liquid, that could sort of like impact the way that assets trade over the weekend when incidents like this occur.
Yeah, I mean, that is a very interesting topic too, because if you look at what happened on Hyperliquid over the weekend, right, there's a significant amount of trading volume. What's that?
Oh, it's Rocket. I mean, I think Hype is up.
Oh, yeah.
I was going to ask you about Hype. I think it's up like 12% since the attacks began. So maybe
Yeah, it traded channels about this morning, but it was up it was up 10-12% over the weekend.
Yeah, it might be the safe haven asset in crypto these days.
Yeah, well, and because it's clear, and what has happened, right, is these HIP-3 markets, which is Trade XYZ, which is where they're doing a lot of the tokenized commodity perps and the tokenized stock perps, and etc. They we've seen significant uptick in volume on the commodity side and on the on some of the rates and side as well. The stock volume hasn't been quite as high. It's been much more around commodities. I think at one point silver did itself in a 24-hour period a third of all Hyperliquid volume, right? And so oil this weekend was absolutely one of the most highly traded asset. But these markets still do have some structural issues in terms of allowing people to take risk over the weekend, because how are the market makers going to hedge out that risk? How there's still you have these kind of buffers put in on Trade XYZ where they don't want to allow these things to trade more than 10% over the weekend, one way or another, because of the fact that if especially if it's equities, if you limit open and things move really quickly, you could have mass liquidations, right? Even just on that ball there. And so there's a lot of structural issues on it as well. But the derivatives and the perp side, or the perp side for the commodities, have been much easier for people to market make, because of the fact that these are markets that you can more easily roll with the sun, and that they are open for much longer periods of time than equities. Equities is a harder problem to solve, and so I think we're going to continue to see that grow. Hyperliquid's doing awesome, but I think there's the long-term outlook continues to be better for assets that are more highly correlated across global markets versus our, call it individual assets in the U.S. market, or call it a European market, etc. I also tend to be, I think, relatively bearish on the current state of spot equity on markets, right, and on chain right now. The way spot works today for most of the products, so Kraken bought a thing called StockX
or
XStarts, yeah, sorry. And there was, there's Ondo and there's a few others. And there's the way they work right now mostly is that it's some sort of, SPV that, a market maker has to go and put in an order to that SPV, and then that SPV, it goes through a US broker dealer, and that US broker dealer then buys the thing. And during off periods, you can't necessarily redeem, and so there's these dislocations that happen, and it's very clunky, and it's really hard to scale that product. And so I'm much more bullish on the derivative side, and I think we've seen that happen today. I think there's a future where call it natively issued stock on chain, where it's its own primary market. That I think has a much better chance of growing than the current state of what has happened on these kind of SPV wrappers that exist on chain.